In early 2026, an app called Sora was designed to become the primary engine for high-end AI video generation. Instead, just 103 days after its standalone launch, the servers went dark. OpenAI CEO Sam Altman heavily promoted the technology, calling it a Cambrian explosion of creativity. The Walt Disney Company bought into that vision, handing over a $1 billion investment to lock down the platform. Then, on a random Monday evening, Disney executives received a phone call. Sora was being discontinued immediately. The cancellation was a massive rug pull, and Disney instantly withdrew its billion-dollar investment. In the fallout of that single phone call, the most prominent AI company on the planet began bleeding its top executive talent. Behind the marketing of a company leading a technological shift, OpenAI is burning through cash and fighting a desperate, quiet war for its own survival. To understand the chaos inside the company, we have to look at the math. By 2026, OpenAI was on track to lose a staggering $14 billion in a single year. A massive piece of that financial hole was Sora. When it launched as a standalone app, millions of users downloaded it in days. But they didn't use it to create cinema. They generated fake scenes of international conflict, political deepfakes, and heavily copyrighted cartoon characters in horrific situations. It was a content moderation nightmare. But the final nail in the coffin was the math. The sheer compute power required to run the app cost OpenAI up to $15 million every single day. Yet, over its lifespan, Sora generated just $2.1 million in revenue. Management realized they were bleeding capital on consumer side quests. Meanwhile, their main rival, Anthropic, was quietly capturing the highly lucrative enterprise market. Paying for high-end compute power to generate disposable internet content is a flawed business model. It simply cannot sustain a company operating at this scale. To cover those mounting losses, OpenAI announced a massive $122 billion funding round in April 2026. But that headline number was largely a mirage, designed to project strength. The capital came from Amazon and NVIDIA. They injected cash strictly so OpenAI could turn around and buy their servers. It is circular financing. Outside investors refused to buy private OpenAI shares on the secondary market, choosing to route capital into Anthropic instead. With outside capital drying up, the CEO spent hundreds of millions of dollars to buy a daily tech podcast with only 70,000 viewers. The acquisition gave him access to the show's formal partnership with the New York Stock Exchange, providing a platform to influence the financial narrative. Meanwhile, their pivot into physical robotics ended in disaster. OpenAI partnered with Figure Robotics, but Figure CEO quickly fired the OpenAI team. He called them virtually worthless, claimed they barely showed up to the office, and accused them of trying to rip off his proprietary technology. The pressure from these failures turned the executive culture paranoid. When OpenAI's CFO raised doubts about $600 billion in future spending commitments, she was immediately banned from attending any further financial meetings with investors. The internal chaos leaked. Journalist Ronan Farrow published an investigation revealing private memos where OpenAI's board members referred to the CEO as a sociopath. Paul Graham, the high-profile founder who originally mentored the CEO, backed up those claims, telling colleagues there was a consistent pattern of lying. Between the internal rot and the financial smoke and mirrors, the company's image as a benevolent force for progress has been completely dismantled. OpenAI currently boasts 900 million weekly users and pulls in $20 billion in annual revenue. But that success is completely overshadowed by an unsustainable cash burn. Now, the entire company is executing a hard pivot. They are ruthlessly cutting the bloat, killing off expensive side projects, and completely reorganizing their internal divisions. They are doing this for one reason. OpenAI is desperately positioning itself for a massive initial public offering later this year. To convince Wall Street they are worth the gamble, they had to prove strict financial discipline. They had to execute Sora. This pivot illustrates a broader pressure on AI developers. Raising billions on technical potential is no longer enough. These companies must now prove their products can actually generate more value than they consume in electricity and chips. OpenAI proved you can build the most famous brand on Earth and raise more money than a small country's GDP. But if your flagship product relies on burning billions to generate viral content, the market will eventually reject you.